Hey, what's going on, guys? It's a common investor here bringing another video. Today we're going to be talking about top 5 ETFs to add to your portfolio. If you're more of you want to put your money into a larger sum of stocks type person, ETFs are a great way to kind of diversify that portfolio instead of picking stocks. Um, First stock we have here is going to be VOO. This is going to be just your standard S&P 500 index. It's going to track the 500 largest companies out there. S&P 500 is just a staple of the market, so you're going to be equaling exactly what the market's doing. So obviously, over the past year, we're in a pretty big dip as of right now. But S&P 500 for the past 100 years has averaged 10% annual returns. After inflation, that number is about 7%. So if you're looking to just kind of stay with the market, do your thing, then VOO is going to be the way to go, the ETF to go. The expense ratio on this, I believe, is 0.03%. So this is going to be the cheapest ETF that we're going to talk about today. Like I said, it's just the S&P 500 ETF, but definitely a great one to add to the portfolio. Next up, we're going to be talking about more of a growth ETF. Vanguard, once again, this is going to be the Vanguard Information Technology ETF. So this is going to be your tech sector. You'll see with ETFs, you can pick by sector. The tech sector is an extremely high growing sector. See, we can over the past 5 years, about 124%. With the S&P 500, we're looking at about 30 to 40% for the past 5 years. So obviously, tech has outperformed the market, the S&P 500 over the past 5 years. Obviously, in the last year, it's a lot more volatile than the market. So if maybe you're younger, you want to expose yourself to a little bit more risk, the S&P 500, would be your market, and then with your tech sector fund, that'll be kind of your more risky play. But with more risk come more reward. So that's going to be your tech sector. Up next is going to be Noble. Noble is going to be your Dividend Aristocrat. So if you don't know what a Dividend Aristocrat is, it is a company that has raised their dividend annually for the past 25 years. So that's just going to be your Coca-Colas, your Procter Gambles, your real solid companies that are just going to keep raising that dividend. I know Procter & Gamble just recently said that they were going to raise their dividend. They are a Dividend Aristocrat. They kill it with their dividend. Any of the stocks that you're going to be investing in this ETF, they're going to be solid. They have track records proven. We got a dividend yield of about 2.42%. So over the past year, I know it's been a more tough year. They are down a little bit. 5-year looks pretty much the same as the S&P 500 index, but you're going to be getting that additional dividend yield and those more quality companies. So that's going to be Noble, ticker symbol NOBL, and that's going to be your Dividend Aristocrats ETF. Next one I want to go to is a monthly dividend payer. I know a lot of people like to invest in monthly dividend payers. This is going to be your SPHD fund. So what SPHD does in their ETF is they pick the top 75 highest dividend yielding stocks in the S&P 500, and then they pick the 50 least volatile of those, and then boom, they make it into an ETF here. So it's going to be high dividend yielders are, they're kind of getting slammed right now. A lot of, companies are going to have to be cutting their dividend, especially these higher dividend yielders. As you can see, the dividend yield is about 5.58%, but these are going to be companies in the S&P 500, so they're going to be one of the top 500 biggest. So they're more likely to, not go under than go under. Obviously, 5 years were more flat. But we're not looking for a lot of, too much growth here. We're looking for not very volatile, even though the market's been, pretty volatile lately. I know back in 2018, we had a pretty big drop, but as you can see, it doesn't really look like it got hit too hard. But like I said, you're going to get the monthly dividend out of this here. So every month you're going to be paid out on the same day. So if you're looking for that recurring payment, SPHD is going to be, your way to go. Expense ratio on this is going to be a little bit, higher than normal. I believe it's about 0.7%. Just a lot more management to, keep this fund going. They're pretty much always changing the, dividend yielders as things get cut and whatnot. So that's going to be the fourth ETF on our list. Lastly, I just want to kind of go over some different sector ETFs. So if you go to lists, sector ETF lists on Robinhood, they just added this feature, which I think is really, really great. Kind of take a look at all sorts of different things. But if you're looking for more of some type of sector, there's an ETF for it. So whether it's you're looking into the marijuana sector, MJ is going to be your way to go. They just invest in marijuana specific companies. So if you think that's the next big thing, that ETF is going to be, the way to go. Another one I like is bots. They deal with robotics and artificial intelligence. That is something that I think, over the next maybe 10 years is going to grow vastly. So that's a good one to put in there. iClean, clean energy ETF as we go through there. Jets, this is going to be your airline sector. Airline sector has been hit pretty hard lately, obviously with everything going on, everything's shut down. I feel like that might be, a good one to hop into. So that's one I am eyeing as well. I do invest in, some airline companies as well. So just depending on where the sector in the market is, you can kind of pick and choose what you're looking for. So what I would recommend, hey, go to the sector ETFs on Robinhood. Check out the sector that you're looking for. Like I said, you can find literally any sector here, even solar, leverage ETFs if that's your thing. And that's really going to be it. So that's going to be my top 5 picks as far as ETFs go. Let me know in the comments section below what ETFs are you looking at, and what do you think about the market. So thanks for stopping by here today, just on this quick video, and have a good day.